Good evening, everyone. Welcome to Tax Talk Tuesday after a week of absence. My name is Mike Rudy. I am a CPA and partner at Guyer and Associates CPAs in Northeast Oregon. We have offices in Baker City and La Grande. And today is March 19th. And as the ticker at the bottom of the screen says, the April 15th deadline is only 27 days away, less than a month. So if you do not have your tax information into your preparer, get it in fast. It is just about the time where if the returns have any kind of complexity, they probably will need to be extended. If it's simpler returns, they're still going to get out. But I would definitely encourage everyone to get it in as soon as possible if you haven't already, and go from there. So as always, we start the show with just some general observation of how tax season is going. I've mentioned it in our other tax talks. This year is refreshing. It's been the smoothest, at least for me, and I think the other partners in my firm since pre-COVID. Things have gotten to clients faster, and they have gotten their tax information into us quicker. It's leading to more and better efficiency and turnaround time. So, however, this is the time of year where things start to stack up. Generally, what we see is between March 1st and right now is the heaviest load of tax information coming into us for preparation. And so it tends to stack up. Returns take longer to get to just because there are so many ahead of it. And so we're in that time of the season right now. So otherwise, things are going well. I have not heard any big things happening out there with refunds not going through or any other IRS issues, except for IRS is pretty much broken. The state tax departments aren't much better. They're sending out notices that are either erroneous or nobody knows what the heck they're doing. So I don't know where that's headed. They're struggling, and that just adds a whole heck of a lot more work for your tax preparers and a lot more annoyance to you as taxpayers. So hopefully they get that straightened out pretty quick. It's really tough right now, I've heard, to get into or to speak to anybody there. It's back to where you're on the phone for hours, and sometimes they'll answer the phone, try to connect you to somebody and disconnect you. It's pretty typical to what we've seen in the last few years. So I'll update as we go through, but that's what we're hearing so far. So the one big thing we've been waiting for this tax season, back in January, the House of Representatives passed the Tax Relief for American Families and Workers Act of 2024. There were some pretty big changes that were going to be retroactive to the 23 tax filing. Have not heard a peep in the last almost a month. The Senate has it, and they're in no hurry to get to it, even though the last reports we're getting is that it's likely to pass. But man, we're at March 19th right now, and there's some pretty big provisions, especially for business owners and farmers and ranchers. So I don't know. I don't know what to tell you right now. Get your stuff in, get filed. Do not wait for that. Like we've been telling you all year, is it's not something that should hold up your tax filing in hopes that that's going to pass. Get it prepared, and then deal with what happens after the fact. Most of what is in the bill would automatically be corrected on your tax returns by the IRS. There are some things we don't know about for small businesses, but get your stuff in. Don't hold it up for that. So last week we had some technical difficulties, had a Windows update, literally for an unknown reason go through that afternoon, and it took hours to complete, and so we weren't able to broadcast. Didn't have a whole lot to go over, nothing new with anything, and generally, we're just at this point giving you some observations on some things as we come across them. But a few weeks ago, we went over why you may owe tax, the things that really impact you, and the reasons why you end up having to owe instead of getting a refund back. Number one reason is under withholding of taxes through your pay or retirement distributions. A couple weeks ago, we did the show all about refunds. Again, generally, we went down kind of how the tax return worked, or the Form 1040 is set up, where you have the income and the deductions and then the credits to get you to that bottom line number of whether you owe or get a refund back. Number one thing on that is withholding. If you don't have enough withholding, you're not going to get much of a refund, okay? And that is shown to be true. One of the things that we have really seen a lot of, and I don't know what's going on out there with the change in withholdings, but a lot of people are under withheld. I've seen it a lot in public, with public employees, and I don't know if there's a reason, but we've seen a reduction in withholding even as pay has gone up, and nobody seems to know what's going on. So if that happened to you, you might just talk to HR and find out if there was something that happened within the system where they actually reduced the withholdings for you and get those withholdings back up. So, all right, tonight we're going to be quick. There's not, like I said, there's not a whole lot to do or to talk about, and I've got a whole bunch of work to do. So we're going to talk about what you need to let your preparer know before you get the information, or as you're giving them the information to prepare tax. This is super important because if you just drop off your information and you put a note in there, that the preparer at this point in tax season might not actually touch that information for a couple of weeks. I mean, that's how far back. I mean, there literally could be hundreds of returns in front of you, and generally preparers just go, in the order they come in. And so if there are major changes, you need to let your preparer know. And even more preferably, if there's big changes, you should probably sit down with the preparer if they offer that, or at least have some sort of communication with them to let them know that there has been a substantial change between 23 and 22, and that could mean way more income, a new job with totally different income and withholdings. If your dependents change unexpectedly, like especially if you have a baby, make sure you get all of the information to them and let the preparer know. If you start a new business, probably best to sit down with the preparer before they start on the return. What not to give them is just a sack full of receipts. Please try to summarize it, because a sack full of receipts, you don't want these preparers and accountants to sit there and have to add up every receipt, and a lot of them don't have any context behind it. Try to at least get them a summary by expense categories like supplies or repairs or whatever. And then generally the next year you'll have hopefully a tax organizer that helps you organize all that for you. But in the first year of your business, best to sit down or at least have a conversation with your preparer and talk about the new business and income and expense and things like that. So same deal, if you closed your business or if you sold your business, best to sit down and have a discussion about that before they start on your tax. And really, if you run in that situation, both with a new business and selling or closing your business, try to get with your preparer or your accountant when that happens. When even before you sell or before you're going into business, it would really probably help streamline everything for everybody on the tax preparation and accounting front. So if you have a bunch of stock gains and other income sources that aren't normal, big bunch of dividends, a big bunch of, you inherited an investment account and it's producing 5 times as much interest as you had last year. Okay. Those are the things that the preparers need to know. And then there's one more that really has impacted a lot of people kind of unexpectedly, I think, in a lot of cases. And we talked about it of why in the Why Do I Owe Tax, Tax Talk Tuesday a few weeks ago. Be careful taking big retirement distributions or unexpected retirement account distributions, and make sure you have withholding. So what generally happens, and I've seen it several times this year, someone needs to, buy something, pay off debt, something. So they take a $50,000 distribution out of their retirement account, which is fine. I mean, that's your money. You do whatever you want with it. A couple things to know, though. Your retirement account provider is generally going to take 10% in withholding for federal. That is like a standard amount that they all do. And then hopefully they take state tax out. Usually it's never enough because of two things. One, if you are under the age that you can take those distributions, you're going to have an early withdrawal penalty of 10%. So you have 10% there, and then you have regular income tax rates on top of that. And so before you take the distributions, if you are under the age to take them, and I'm not going to give you a hard number, 59 and a half is where it's been, but there's all kinds of exceptions to that with some public pensions and things like that. But make sure when you do the distributions that you are adequately withheld on those. I had a client that took a large distribution, no withholding on the distribution, didn't understand it was going to be taxable, and ended up paying a pretty significant amount of money in tax because of that they weren't expecting. So if you did do it and you didn't prepare, didn't have withholding, make sure the preparer knows that as you're dropping your info off. It makes a difference because, and we'll get to it in a minute, but April 15 is, I'm going to turn off this little ticker. Sorry about that. April 15 is a very important date if you owe tax. You need to pay the tax either through an extension payment or a filing payment by April 15th, or you're going to have late payment penalties. And those are not fun. So if you do have these distributions, you don't feel like you're adequately withheld, let the preparer know and say, hey, I might owe tax. And they'll try to get those expedited through to make sure that it's filed in time for you to make the payment so you can avoid penalties. So, all right. So that's just some things if you're still getting things together to get to your preparer and you have those big changes in your life versus the 22 tax year, make sure that your preparer knows that. Don't just leave them a note. Try to meet with them or call, leave them a message, just so they're aware of that. Okay. So that's the things that you need to do for your preparer. I'm going to go into this because right now, this is the season for all kinds of wacky things to happen as we get down to the last month, right? So here's some things not to say to your preparer or do. And please, if you've done it, don't feel bad. Everybody does these. These are common things, right? The number one thing, please be careful with social media tax advice coming from a guy that is talking to you on social media, right? So, but I'm telling you, the last few years, the number of tax tax experts on social media platforms, and specifically on TikTok. All right, for the younger generation, these influencers love to give tax advice, whether it's legal or not, right? And so there's some really wild things that are coming through social media, that people are asking their preparers to try to minimize their taxes. But look, I mean, just be careful of who you're listening to. Understand who they are, if they're a credentialed taxpayer or tax attorney. Um, you have tax attorneys, CPAs, and enrolled agents, which are known as EAs, are licensed to practice in front of the Internal Revenue Service. And then you have licensed tax preparers that also they've passed the educational components to be able to prepare taxes, things like that. So make sure you understand who is giving you the advice, and then be wary on top of that. All right. So I've had a couple clients come in and try to talk about strategies they heard on TikTok, and that is, for the last couple of years. Taxpayers generally, don't be surprised if they roll their eyes at you and just shake their heads. Generally, it's not good advice. Sometimes it's downright illegal, and so just be careful. Okay. The other thing that taxpayers they get a little cranky with, my friend or my friend's preparer or accountant said, and then this, right? And so generally, when we hear that, it's not accurate advice, and you playing the telephone game when you're a kid, and so by the time it goes out of the accountant's mouth or whoever they're listening to's mouth and interpreted by your friend, and passed on to you, it's usually a complete different interpretation of what was actually said by the original preparer or accountant. So just be careful with that too. If you're going to the right preparer, they know their stuff. Okay. Um, if you don't know the person that's giving the advice originally to your friend, then I'd be very skeptical. Even after you know who it is, if you know who it is, be skeptical too, because your friend may not be understanding what uh, they were being told. So we see that a lot. Okay. We hit on this one a couple weeks ago, comparative refunds, and I devoted some time on that, of why comparative. My friend is in the same situation, have the same job, make just about the same money, have the same number of kids, but he gets $5,000 a year more in refund than I do. What's going on? Be really careful with that. Generally, it boils down to withholdings and income. uh, uh, Whether it's they have a lot less income from other sources than you do, or their family doesn't make as much money as you do. But generally, it's withholding. So your friend gets $5,000 back more, but they are having $5,000 more withheld out of their check during the year, and so their refund is just them getting their own money back. And so we talked about, are refunds good or bad? Uh, it's whatever it is. It's generally you're getting your money back. If you don't want to get a big refund back because you're just lending your money to the government, then reduce your withholdings. If you're paying, increase your withholdings. It almost gets to be that simple. And then you also have to really be careful with tax credits, especially child tax credit. If your kids turn 17, like my kid did in 2023, you're going to lose $1,500 of child tax credit. They go from $2,000 to a $500 tax credit. So, and the $500 is not a refundable tax credit, like child tax credit is. So, all right, moving on. So right now is the the point in the season where we get a lot of calls about what's the status of my tax return. And so, like I said, people probably aren't aware of really how many tax returns a preparer has in the pipeline. And uh, it especially getting taxes in right now at this point of the year, it could take 2 or 3 weeks before they are done. It might take a couple weeks before the preparer actually gets to that return. And so uh, people try to call in and find out the status of the tax return. A lot of times they're not going to get a call back. The preparers just don't have time to call back and give you a status update. So if you really want to make your preparer happy, instead of calling, email them, or if they have a text line, like I do, text them, and it's so much less time to respond back to an email or text, and we can respond back at hours outside of 8 to 5 or however whatever the workday is. Um, it I'm telling you, because I start really early in the morning. I'm up usually between 4 and 5, and start working here from my home office where I am now. And so a lot of times I will respond to emails first thing in the morning or late at night after I get back from the office. It's just so much easier and quicker for us to do that than have to call back people. Usually there's, already a lot of phone calls, like we're expecting information and we call to get information to finish preparing a tax return. And so there's usually a stack of voicemails that we are dealing with, and then calling specifically to get information. It takes a lot of time, and you have to understand, especially with the partners during the day. Most of the time, their days are filled with appointments. They're either meeting with clients as they drop off information, or they're meeting with clients to deliver the tax returns and go over the taxes. And so I know, especially right now, with it's an industry wide issue. There's just a staff shortage, and so the partners are really having to prepare a lot more of the returns than they may have previously, or pre-COVID, when staffing wasn't that much of an issue. It freed the partners up to deal with clients a lot more, and a lot more of the time was able to be spent that way instead of actually preparing the taxes. And generally, the partners would be preparing the pretty complex stuff that a staff accountant, a junior staff accountant, may not be able to prepare now. And this is kind of an industry wide deal. They're having to do mid level and up returns because we just don't have the staff to prepare all of the mid level and up uh, uh, taxes. So really, if you want to make your preparers happy, shoot them an email or a text. Just check on the tax. Just be aware that this time of year, uh, if you drop, or if you're dropping off now, it's going to be, it's you're bumping up against deadline almost. If you have submitted your taxes even back at the end of February, if there's any kind of complexity into those taxes, it's going to take a little bit longer. Normally, because you're going to have a more experienced tax preparer preparing those returns, and it's going to take a little bit longer. So just be patient. If there are issues, they will reach out to you. But shoot them an email or text just to check on it if you need to, and try to not call them if at all possible. So I know it's kind of a generational thing, and I'm not new school. I'm we didn't have personal computers back when I was even in high school, so it's nowadays with the technology, for communication purposes, it's great. We save a lot of time that way, and it allows us to spend time where we need to, instead of returning calls all evening. But after tax season is generally not an issue. Would love to call and talk and catch up. That's the other thing to kind of keep in mind. If you can, try to avoid non 2023 tax questions unless it's time sensitive. It's just a general question on stuff for 24. You might wait till after April 15th to call in. It helps also. So, all right. That's really all I have. Get your stuff in. We are working as fast as possible to turn around. All the firms are. And so, it's coming. It's the deadline's coming. 27 days. It doesn't feel like a lot of time, but we can prepare a lot of taxes in 27 days. So, uh, as always, please message me, email me with questions or topics you'd like to see on Tax Talk Tuesday, and I'll put them on air. Even if you're watching live, I know it's kind of hard to catch live all the time, but uh, give me a shout out or a comment, and generally I can respond back. But I hope everybody has a great week. It's a beautiful day today. I think it's going to be beautiful tomorrow, and then it's going to turn back to normal. Accountants and tax preparers, you know, it's a hard truth, but we'd prefer gray and cold and rainy over a sunny day right now, because the sunny days and the warm days makes us want to go back out instead of staying at our desk working. So, but it was a gorgeous day today, and I'm glad that we got the weather. The kids are out playing. I know there were some games today here in Baker, but it's good to see. So, anyways, I will talk to you next week, and hope you have a great week, and everything goes well for you, especially tax wise. And shoot me your questions. Thank you very much.